Today is October 16th. It's Thursday, and we're here with another edition of Chart the Markets. My name is Mark. I'm from Blunhouse TA, and I'd like to thank our friends at FEG Token and SmartDefi.com, of course, as well as our exchange partner, BYDFi. And I encourage you to go to BYDFi.com, enter the referral code K5Z4, capital T. Actually, everything's capital with the exception of the P. K5Z4TP. And here's the eligible for our draws that we do each session, where we award some trading bonuses to some lucky winners. And let's get to some charts. So we have some real volatility happening in the market right now. And we talk about things in this stream all the time. I'm just going to go to another chart because I want it to be a little clearer. We look at this stuff all the time, right? And you know, one of my fears is, and I was speaking to our friend Rico the other day, and I'm always afraid that people are going to go, oh, TA's boring. It's just the same stuff over and over and over again. And yeah, it is. There's a lot of repetition to what we do, but that's how we get better. We're not asking you to learn a million different things. We're just recommending that you learn a handful of things really well. Mitigate risk, understand how price moves, and so on and so forth. The one thing we talk about all the time is how to manage trend. And this is a chart of XRP, and we're not picking on XRP. It's just kind of a little clean chart. Pretty much every daily of every major crypto will look like this. Where here's Friday, we had the big impulse down, right? And just that blank look, it looks okay. Just a big wick going absolutely nowhere. Just a random thing. But we know that it's not. Most importantly is what we learn on how to manage trend, right? Everyone talks about when do I buy, when do I sell? Well, we make it really simple. Here's your sell signal on your daily chart, right? Way up here. But after this big impulse candle down, and obviously it retraces somewhat, but let's just take the low for now. What do we notice? We have all this divergence, and we know that divergence, you know, moving down is momentum down in price. So when we are looking at the chart and you see this, everyone's instinct is, okay, I'm going to long this and, you know, buy the dip and all that kind of stuff, which is fine. But let's not kid ourselves on what the trend is. And I remember being asked this question over the weekend. Is there more down for these charts? Yes, there is. Why? Because we're being told that this divergence is confirming the trend is still down. And what happens when we have a failed breakout? We arc up, we roll over, and we do what? We take out the previous wave's low. And that's what we've done. This stuff repeats time and time and time again. Any asset on any time frame. So trusting, this is a trust your chart kind of a teaching moment. This is a great example of a massive impulse down. We may not see a move like this for another decade. Who knows? The fact of the matter is you have this massive impulse down. A little bit of a recovery. 3 green candles that do what? Test the T-line and fail. There's your arc, right? And fail. Can't break the T-line. The T-line is what for us? It's a filter, right? It filters out all the BS. These 3 candles, they're just green candles in a downtrend. We knew that because of the divergence that we saw. These are the kind of things that become your edge when you understand how to use them. And as exciting as it is to see a snapback like this, the trend is really important, right? The trend is your friend right till the end. This is just a mild retracement higher that can't break a significant level, nor does it have the momentum to pull a shorter term average above it. And then whoosh, price rolls over. We talked about this. So trust the chart. Are these exciting to see? Yeah, sure. But Everything that you need to know about what's going on is on that chart, and that chart is telling you that this is still a move down, and we've been saying this since it happened. And that divergence confirms it. It doesn't matter what we look at. You know, here's a chart of Bitcoin. Spot Bitcoin chart. There's all our resistance up at the upper value range, and very similar look to the XRP chart where you have that big impulse candle down, and that divergence between the T line and the 5 EMA has held, confirming after you got excited when you saw these green candles, but they didn't even break the 5 EMA. Ultimately bearish, and what happens? Price rolls over. This is the failed breakout. Come back and take out the previous wave's low, which it's done. Now it just keeps looking for the next, right? Took out this one. Okay, now what happens? That's what we're expecting, right? We're expecting it to take out the previous wave's low. Now that that's happened, what's next? It's always what's next. Now we're looking for this one. We take it out. So now we're looking for this one, and we've just taken that out. Before we came on air, I said, I have a funny feeling that something's going to melt today while we're doing this. And it looks like that's the case. So here we are taking out previous waves lows, and that'll continue until we can find a place to rest. Now, if I just switch charts for 1 second, and I go to the chart that we've been using for months, that has these levels that we've plotted out here. And why did we do that? We did it because we wanted to be able to demonstrate how current levels are relevant in the future. Now, did we take a big gamble in doing this because it could make us look like total fools? Absolutely. That's always the risk, just like being a meteorologist. But these levels that we've plotted out here are incredibly reliable. And this current level that we're talking about on this chart, on the Bitcoin chart, is structural. And I think we showed it on the XRP chart last maybe Tuesday, that it was breaking a structural level. The same thing is happening now on Bitcoin. This is structural. Support resistance, support resistance. It's now breaking down. And where do you think it wants to go? Let's take a look at our volume profile. We've already broken the point of control. Probably going to come back and look for the levels that we've seen before, because we know that current price looks for past. That's what's happening in these moves up and down with the ebb and flow of price. Current price is looking for past. And on days like today that are volatile, and you have these big massive red candles, they'll blast through a lot of levels until they can find something that they can sit on. Keep an eye on this level. Keep an eye on this level in here, because we're starting to break down a bit. But how do we add some context to this daily chart? Quite simple. We just start flipping on some of our major moving averages for reference, because we know that they represent time and price. Right? Time and price. The red is what? On our charts, it's the 200 MA. So if you're in our Telegram group, we've been telling you since this whole thing started, because we broke, this is just, it's a little bit of if this, then this, right? So on this chart, I'm sorry if it looks busy, but this wick broke the 200 MA. So in my world, that kind of makes it vulnerable to a retest. These wicks that hang out up and down, they're always vulnerable to retests. That was kind of the belief, making me think that maybe we'll revisit the 200, right? So here we go, and we're almost there. So if you're in our Telegram, we've been telling you to look for price to come back to the 200 as a next target, acknowledging that if it was to do that, it was going to break somewhat of a structural level on this major move. Now, what's going to happen when we come back to the 200? Well, here's when we broke it all the way over here to the left. in the bottom left-hand corner, going back into, what's that, April of this year. So we haven't seen the 200 since April, and it looks like we're going to. Please understand that it's not abnormal for price to revisit the 200-day moving average. Right? It's not. It's quite normal. What might be abnormal is that we haven't seen it in this long period of time. But here we are. So what happens when you have these first attempts? They usually get supported, right? When price comes back to test a level, they often get some support. This is a key level, the 200 MA, because it's the most basic bull-bear indicator that we have. Right? So if you're a new trader on any time frame you're using, that 200 is a bull-bear indicator. Below it, you're bullish or bearish, and then above it, you're bullish. Coming back to test it is totally normal and appropriate. Why does it feel so painful? It feels so painful because all we've done is go up. And when that happens, the levels that we retest, those levels of past price here, right? Price has come back and it's checking past price. It's going to draw to it like a magnet. If price doesn't hold at the 200 MA, we would expect it to get a little support anyways, but let's say it fails. Where do we go? Probably to the lower value range of the volume profile. And what's kind of sketchy about it is that this lower value range is kind of the last line of support before it would fall into these gaps with very light trading. And if you thought this was fun to watch, that could be a whole other thing. I'm not saying that's going to happen, but I'm just saying in the event of a continued failure, those are the types of things we look for. We're just looking for levels. Just continue to look for levels. 500-day moving average, okay? It's just there to remind us that in the event of a continued failure, that it's susceptible to a tag. Just like the 200 was susceptible to a tag in the event of a pullback. Now, just to add a little more context, let's go to a weekly. Can we learn anything? Well, yes, we can. Just going to switch to that other chart if I can. Might not let me. Kind of locked up. Everybody in the world is trying to watch charts and trade all at the same time. Okay, here we go. Let's look at the weekly. Because, you know, what's that weekly going to do? It's going to take out the noise, right? That daily, that intraday nonsense, it's going to take all that out. So this is going to help us with Bitcoin. So we saw on the daily chart, if you recall, that where price could go eventually was to where that gray trading was. It's going to take a second for the volume profile to show up down here. So if we fail the 200, what's this level? Geez, 100,008. That's the lower value range, 100,008. Just want to put a little line here just for a moment, just so I don't lose it. Is that 100,008? Something like that, just in there. That is the lower value range on the daily, just for a reference sake. So if you recall, there was a whole bunch of gray underneath that lower value range on the daily chart. And this, as you see here, this is light volume. This is where all the dense volume is. Where does price move the quickest? In this light volume where there are gaps. So we know on that daily chart that if we get down here and break, which you can see is pretty much the 50 on the weekly, that's a problem. Why? Well, we're already in super light trading on this time frame, and we have gaps beneath us. So that's the downside risk. So a couple weeks ago, we were talking, and I kind of recall it quite specifically, this level here, and I referred to it as not today's problem. Well, it's today's problem now, right? It's today's problem now. That lower value range on the daily, this level in here, the 50 MA, all of this is a bit of a draw for price. While you're trading in light volume with volume gaps beneath you. So this could get interesting. And we're finally seeing a sell signal. Even after last week, the sell signal showed up this week. So there's a lot for you to take in here. The advice would be, and not financial advice or anything like that, look, we're getting closer to the 200, is if you're using leverage, use less and take profit more frequently. Even if you think you're taking it at a lighter percentage, do that more frequently. It's in your best interest. Try and stay out of the chop. And please, please, please use your stops. Like, if the platform I'm trading on allows me to use a hard stop and a trailer, I'm doing that. It's all part of how I mitigate my risk. Right? So please use your stops. Less lev, and that will suit you better. And yesterday in Rico Moneybag's stream, we talked about how if you can't manage the volatility, let's say you're short, but you're so leveraged that you can't manage the volatility of the candles of the time frame you're trading on in the proper direction of the trend, then you're using too much leverage. You're better off using less leverage and staying in the trade longer than you are using more and not being able to manage the volatility within a wick up or down and getting stopped out or liquidated. Right? Use less so that you can allow the trade to actually run and move in the direction that it wants to. Will every move be like the one on the left here? No. But these are very, very profitable. These kind of sell-offs that we're seeing right now, they don't happen every day. But they're happening today. So I'm sure we're going to have lots to look at. Let's look at ETH while we're doing this. ETH is down just over 3%. Same setup on the daily. There's your impulse candle down. The divergence there between your T-line and 5 EMA never broke, telling you that that trend was still down. Now, how can you trade that? Real simple. When you see this to the right of your screen, and then you've got, let's say you were short, and then this big candle stopped you out, or whatever happened, knocked you out, got scared, whatever, the trade is closed. You see this divergence, then the following candle is red, creating an equal top like that, and then all of a sudden you'll see your 5 EMA and T-line arc down, re-enter the short. Because you know the direction of the trend, you have a higher probability of making a better trade, of making a safer, more profitable trade. That's the point. You don't have to be a mad scientist to do this. And here we are. Where do you think we're going to do on ETH? Impulse down. Here's your failed breakout. You do get above the T line, but it's the arcing that we're paying attention to, and we're paying attention to what the T line is telling us. It's telling us that we're moving south. Price rolls over, look to take out the previous wave's low. So many people thought that the bottom was in, it was just a big impulse down, nothing to worry about, buying opportunity, bang. Look at that, 2 green candles. Told you. No. How many times we show this? Not just on dailies, but weeklies, monthlies, 5 minute, 15 minutes. They're all the same. They're all the same. Let's look at BNB. You know, BNB's probably been the most resilient and has showed the most price appreciation, I think, out of many. It's done incredibly well. But what does it do? It actually prints that kind of M pattern that we see quite often. These are the types of things that once you see them, you can't unsee them. Right now, we know a lot about the psychology of these moves, right? Oh shoot, I wish I should have took my money off up here. Price falls, creeps up, always creates that equal top. And a lot of people believe that everybody that didn't get out on that left, get out on the right. But it's not a problem until price breaks that center channel. But this thing is looking to do what? There's your upper value range. Nobody wants to take it higher than that. So if you're using the volume profile and you're looking at this chart, let's say you're looking at it up here with that wick, and you're looking at either maybe taking money off or getting short, right? Let's pretend this is such a crazy day that it doesn't make a lot of sense in a lot of people's world, right? But let's just carry on. You have these two wicks that try and break through. And you remember a couple months ago, we had our friend Carp in our stream, and he has this saying, the first mouse gets the squeeze, the second mouse gets the cheese. And basically what he's referring to is that those first attempts, up or down, often fail, right? Well, this one did. Then it took another shot at it up here and also failed. So if you're looking at your chart and you see this M pattern, you see these points out, you see these big wicks at resistance being pushed down, is it appropriate to think about taking a short? Yeah, it sure is. And here you are. So you can wait for the confirmation, because this is our safe, profitable entry. That's what the script is doing for us. But we're giving you an opportunity, because you know how to read these charts now, to take advantage of these ranges. Part of what we do is to track price, right? We want to be able to track what it's going to do, and is it in the right direction? That's why we're using the T line and the 5 EMA as a filter. Obviously, that's bullish. Obviously, this move down is bearish. You're trading above the T line and the 5 EMA bullish, below it bearish. Pretty simple stuff. But now we have the opportunity to trap it. So we're trapping price. We've got a solid range on the volume profile. Lower value range, upper value range, and the POC, point of control. So I'm trading, if you're buying down here where you get your buy signal, you're going to see this upper value range and know its possible resistance. Whether it's here or here, but it's that second mouse where you fail, that would be the ideal entry. This would just chop you up and make you crazy. So on that daily, where does BNB vulnerable to the downside? Well, you're trying very hard to stay out of this gap, because if you find yourself in this gap, price can sink pretty quick. And this is probably shaping up to be one of those situations where they're going to shave a lot of ROI off a lot of people's books real fast. And then, price will recover again, we hope, right? But there's no knowing what comes after the current candle. We just can look at the conditions that price is trading in order to make some educated decisions. So on this daily, you want to stay out of the gap because price can fall into the gap, and when it does, it moves quick, and then it'll look for somewhere to rest. Well, we talked about trapping it in a range. Well, that lower value range would be a target. And additionally, just to add a little more context to the chart, throw on the 20. Well, you can see the love that the 20's given price on BNB. You get these continuations off the 20 time and time again. Well, now you're starting to fail it, and price is doing two things. It's looking for this previous wave's low and breaking the 20. Now, of course, we haven't closed, but if you were to close, you would close below the 20, and that's just another little red flag for you. Throw on the 50 because you're going to be looking for the next level down. We break one level, we're looking for the next level. Because this wick struck through the 50, the way that I interpret the chart, that means it's more likely on the next pullback that you find the 50. Make sense? Right? And again, there's that gap. We want to stay out of there. Throw the 200 on. It's way down here. And again, it's not today's problem. And hopefully it's not tomorrow's problem. Today's problem is staying out of this gap. That's that would be today's concern. And how do you pick up these things early? You just shorten your time frames. So again, let's kind of wash this candle, but there's that second attempt that we saw on the daily. And this is why we use fractal analysis. What do you see on these two 4-hour candles? Two equal tops. So on the daily, we just saw a wick go through it. But on the 4-hour, I see two equal tops. For me, that's more confirmation that price will probably fall. But you can only gain that through multi-time frame analysis. And that's why we use it, right? We live in a fractal world. And as far as, on this 4-hour, it kind of gives us a little sneak into what might be happening on the hour. It kind of on the daily chart, gives away all its secrets, if you will. There's the 200 on the 4-hour, right where? The lower value range. So that makes it more likely for price to be drawn to that area. Right? So hopefully that kind of makes a little bit of sense as to what's going on some of these, daily and, mid time frame type charts. But this is really starting to let go. And we should not be surprised. I know this is a really easy thing to say, but it's a hard thing to listen to. We shouldn't be surprised that price is coming back to check particular levels, right? Like, we shouldn't be surprised. I think we almost wicked the 200. These are levels that price is drawn to, right? There's an ebb and flow of price. Nothing goes straight up, nothing goes straight down. There's a process to how it gets there. Right? And when there's such volatility and you come back to levels that you didn't think you'd see for quite some time, it's shocking. Right? And it's going to shake investors, people that, especially in this space, because the drawdowns are so intense in crypto, that it will unnerve a lot of people. Right? They'll sell at losses. They'll do a lot of what we know are unreasonable things. And how do you, this is hopefully why you're here, so that you can start to see that when you have an understanding of how the ebb and flow of price, how it moves on the chart, it makes moments like this less terrifying. And I didn't say not terrifying, I said less terrifying, because it's unnerving. We're human, right? Nobody likes to see money melt, right? But hopefully the other reason that you're here is because you understand that you have to monetize the chart. This is the job of the trader. My job is not to fall in love with assets. Could care less, but I honestly do. The chart is a means to an end. That's all it is. I have no relationship with it other than what it tells me. Everything that we use in technicals, and you know what we're seeing here is pretty basic, but it's all based on math, and math is a language. And if you believe that math is a language, which pretty much every reasonable person does, including Bachelard, Mandelbrot, Fibonacci, fibs, fractals, filters, all those people believe that math was a language. So we're learning a language. What we're seeing on our charts is a representation of a language. Price will perform certain ways under certain conditions. Time and time and time again. Now, here's a chart we haven't looked at in a little while. Was that Zano chart, because price was going crazy there for a bit. But what's it done? Pretty much the same thing as everything else. Had its high, came back. Was it trading a little bit rich, far away from the 20, which price doesn't like to be too far away from, because when it gets too far away from the 20, you're obviously experiencing volatility either up or down, right? Or parabolic moves or exuberant moves up or down. So eventually you're going to come back and test the 20, which it did, but it didn't hold. So you break one level, you find the next. What do we think it's looking for now? The 200, right? It's failing the 50 too many times on this daily. And where's the 50? It's hanging around up at the upper value range. All areas where you would expect a little bit of resistance. Now, it's volatile like crazy because there's not a lot of volume to it, so it trades pretty thin. But it's traded right back into this volume gap, with the point of control being at 10 bucks. Now, this is where these charts test our mettle, right? If you feel that you want to wait for a pullback, you don't want to buy at $17, you can literally walk through the retracement or the pullback, whatever it turns out to be. Broke the 20, fine, I'm looking for the 50. Can't break the 50 up here. It's getting all kinds of resistance. Major sell-off again, a little bit of a retrace, but I would expect that it's going to come back and look for the 200. It doesn't matter what chart we're looking at. The rationale of how we process what we see is the same. Let's look at oil. The thing that everyone says can't go any lower, but it just seems to keep going lower. When we see things on a short time frame, like on a 5-minute, a 15-minute, an hourly, you're like, wow, okay, that was a meaningful price movement, coming back to check certain levels. So you have to have an appreciation that as you extend the time frame, the relevance and meaningfulness of the move that you're seeing is actually quite important. And this is a monthly chart of US oil. And we have walked through time and time again how this chart broke down. We've showed the daily, we've showed the weekly, we've showed how we got to 61.66 as a target when price was $93. We walked through kind of the anatomy of a breakdown on various different time frames. As we go to the monthly, just to illustrate, now I've showed you 3 or 4 charts, or maybe 5 charts already, where we talked about these failed breakouts. Here's a failed breakout on oil on a monthly chart that takes out those previous waves lows. Time and time and time again. And it will continue to fall until it can find an area of past price that it can rest on. And I believe it's looking for this. I believed it was looking for here when it was up here, and everybody thought I was a lunatic. But we've walked through what happens if price was to continue to break down. If this, then this. Well, here we are on a monthly chart now. This is the 500-day moving average. It's basically the last thing that would show up. Oh, but that sounds crazy. Has it been there before? Yeah. Back in 2021, back in 16, back in 1998, and that's about all the data we have. So it's been there before. In the event of a breakout or breakdown, when either there's no resistance or no support, price is looking for where it's been before. And it will continue to fall or rise until it finds a place that it can rest. In this case, it's looking for a place to rest. This is really, you got to remember something. Each and every day, this is the most valuable trade in the world, is oil. So there's something going on. I don't know what it is. I don't claim to know what it is. I just know how to read price on a chart. Just give me a handful of crayons and a piece of paper. Fact of the matter is, I also don't care. I don't get in the thick of thin things. It's not my place. The only thing I care about is how price moves on a chart. Why? Is because it's a real-time representation of what money's doing, not what people are saying. Who cares what people are saying? People say stuff all the time. Analysts, gotta love those guys. They say stuff all the time. But can any of them actually read price on a chart? Maybe that should be a prerequisite for some of them. Like, we're getting ridiculous now. I can't walk and chew gum at the same time, but come on. I can do this, so can you. I don't care why nobody else can do it, or why other people can't do it, or won't learn. And I'm not saying this is the only way. There's so many really credible ways to interpret price on a chart that have a proven track record of being successful and mitigate risk. But like, this is getting from the sublime to the ridiculous. Like, here's the Dow. Let's go to YM on the monthly. There's the daily. Like, this thing has just gone straight up. Like, people do realize that at some point in time, you'll exhaust yourselves. Right? And price will need to find a new place to spend some time. Like, I don't think we have anything to talk about until we break the 50. I think, unfortunately, what we're feeling right now is just because price has gone nowhere but up, even a mild retracement, even though these candles look huge, this is a very mild, if you can call it a retracement at all, in the grand scheme of things. So, you know, let's not start panicking or getting overly concerned until we break the 50 in a meaningful way and actually end up in a leg down. Because that leg down is going to take you to that upper value range. It's going to have you have to deal with this gap. You have the 200 as a draw, the point of control, and so on and so on and so on. But, you know, these are still relatively bullish charts. The weekly's still bullish. Is it still trading above the 20, the 50, and the 200? Yeah. Haven't broken the divergence yet, although you're getting closer. But this is still a relatively bullish chart. So, and we haven't even hit the 20 on the weekly in this move. So if that does happen, it will feel incredibly painful to a lot of people. And all it is an expected move to to a level that you should anticipate you check on any time frame, but it's going to feel like it hurts. And I think that part of the problem will be for the markets is that this is going to mask, because it's been parabolic for so long, that the initial phase of a breakdown could really mask what's going on underneath, which could be more problematic. Don't know that for sure, but that's just because we're so extended that even, you know, a pullback to here just basically takes the cream off the top. So this is, you know, we're obviously not done doing whatever we're doing. And it doesn't matter what we look at. You know, we've looked at oil, it's down almost 2%. You know, we're looking at the major markets, they're down considerably as well. Like everything is down. Dollar down, rates down, Bitcoin down. You know, these are times that it's hard to find a place to hide if you're long, right? So this is why it's important to learn how to trade short. You have to be able to monetize the chart in any market. Like when markets sell off, and if you're only comfortable trading long, well, what are you going to do with your time? Learn how to trade short, or just wait for the market to flash green so that you can trade again? You really do have to learn how to trade short, because it is true what they say, that you can make money in any market. That is true. Right? What we're showing you is YM, which is again the futures contract for the Dow. And we talk about the 200 MA being the most basic bull bear indicator that anybody has. And you can see that, hey, we're trading above it, bullish, trading below it, yeah, kind of bearish. Right? So when you see resistance at the 200 like this in these kind of big sell-offs, you want to be able to take advantage of them. But you have to be at the right place at the right time. So if you're, you know, a futures trader and I'd like to have a handful of things I trade and chart. That's it. I don't throw too much at myself, because it just makes me look at too many things and then I lose focus. So I just focus on a handful of things to trade all the time. And, you know, YM and NQ and ES are part of that mix. And our script is really effective on particular time frames, on all time frames, but I find on futures charts, on the 1 hour in particular, it does give nice clean signals. These are extreme, like we don't expect these big down moves all the time, but it does give you reliable signals, so that you can be at the right place at the right time. Go to the 4 hour, here's the 50. We know that the 50 MA is resistance for us. I'm always looking for a time frame where price is playing off the 50. Here you break the 50, here's your first attempt at the 50. What did first attempts typically do? They fail. Sold off hard, rebound back to the 20, but is this the first test of the 20 since you broke it? Yes, and what happens? You fail. Second attempt went through. 50 was a different story, right? And you still ultimately failed.
Hey, Blunt.
Hey, good afternoon.
If you get a second, can you take a look at the TG? It looks like it's frozen on the Xano part. I think you were on the YM, correct?
I am. Okay, let's fix this. Sorry. How's that? Are we back?
Perfect.
All right. Yeah, I'm old, man. You got to help me with stuff like this from time to time. Don't wait so long. So yeah, here's on the 4 hour chart. What I was going to say is, ultimately, like if you're these ranges are always suspect to me. Like it's always a stretch that they get hit, but geez, I don't want to be on the wrong side of something when it does try and get there. So always know that when you see the upper upper and lower value ranges that they're boxing in price. Yes, you're going to see little extremes above and below, but it creates a nice range, right? It really does. Do you want me to look at any symbol in particular? Let's look at Aster today because we looked at it. Yikes. We looked at it yesterday on Rico's stream, and I'm going to shorten this up because this is a new issue and it doesn't have a lot of data. Does the upper and lower value range give you, does it trap price for you on this time frame? Absolutely. So does the point of control. It didn't yesterday, you know, we were kind of talking about, will this chart give you an opportunity to get a breakout to the upside, and it doesn't look like that's happening today. There's an example. There's our sell signal, right? The impulse down. Then we get this ridiculous candle, this green candle that hits the 20. So what was the purpose of this candle? Well, I shouldn't say the purpose of it, but let's just say what happens as a result of this candle. That candle washes a lot of traders out, right? It'll stop you out, liquidate you, scare you away. The list goes on. Did it have enough velocity and momentum to drag the 5 EMA above the T line? No, it didn't. Was it the first attempt at the 20 since it broke it? Yes. First attempts typically fail. Is the divergence here showing down? Right? Yeah. As long as the divergence is open to the downside, you're okay. Here's the next candle. 2 equal tops. So when you see these candles, like this green candle here, pay attention to what comes next, because it might give you another opportunity. You see how you have the divergence still intact, right? It's open. Even though it's directing up, it's still open. And the candle just doesn't have enough to drag the T line through, or sorry, to drag the 5 EMA through the T line. So this downtrend that you see, although you have a little up flash here, is still intact to the downside. Next candle, big red dagger, 2 equal tops. So you get a real nice entry short again. Impulse down, price goes where? Sideways. What does not happen? It doesn't challenge with any meaning whatsoever the 5 EMA or the T line. It just goes sideways. And I interpret that as it just doesn't have it. It's just bearish. Right? So here you go sideways. Right back to the 5 EMA, which would kind of give you another opportunity to re-enter short if you wanted to, or add. And price continues to fall. Here's your first signal higher. You break the 20. You know the 50's up there. That would be your target. Don't make it. And if we can't make the if you can't tag the 50 at least to test it, that's weak. And it sells off again. This is the chop that you don't want to trade. These are the breakdowns and these are the breakouts. And you know, you just wait for this divergence to open up. Right? You'll be able to see. You'll be able to check the 1 hour. Just dial the time frame back a little bit, and you'll see how you get a little opportunity in advance. And that would have been up here. So if you like what you see on the 4 hour chart, this is why we use fractal stuff, right? If you like what you see on the 4 hour, hey, back it up a little bit to the 1 hour and see if, hey, you know what? It does look like the 1 hour is breaking down as well. So maybe the 4 hour is going to roll, which means, hey, if I'm lucky, the daily will too, if you were short. And, you know, for all the hype that this platform gets, it's not showing in the price. And I can appreciate that it's at a bad time and everything, but it is what it is. Let's look at Solana. as we've talked about that. What do you think it's looking for? Same story like XRP and Bitcoin. Impulse down, creates all this divergence. The snapback higher wasn't great enough to change the trend, and this ends up just being a failed breakout. There's your two equal tops. This is on the daily. We show this on every time frame just to demonstrate that it happens on every time frame. It's just seeing it enough times for you to appreciate it and understand what it's telling you so that you can monetize it, because that's the job. Monetize the chart. Impulse down, bounces right off the 200 in the point of control, fails, two equal tops, rolls over. Price is probably looking for the previous wave's low. Some of them have already gotten there. And you just manage the trade accordingly. This is some crazy volatile stuff, but even with that, our script and our methodology on how to manage this was completely perfect. Impulse down, everyone thinks they want to go long, which fine, we know that's just going to be a trade. As long as this divergence down is still there, we know it's just going to be a trade. So you could monetize that move if you wanted. Boom, price rolls over. You'll see this time and time again on all these charts. What's not going down today? The thing that hasn't been going down really at all for a very long time, and that's gold. Gold is a risk asset, right? It's a, whoops. Gold is a risk asset, and for some reason, it too has gone nowhere but up. But it doesn't matter if we're charting a commodity or a stock or crypto, an index, an ETF, it doesn't matter. We interpret our chart the same way. If you're, this is the chop we talk about, right? All this sideways stuff, and you know you're in the chop because your averages will have the opportunity to come together with all that flat trading, right? All that negligible price movement over time brings those moving averages together, just like you see here. So that's how you know you're in the chop. And it's something that you probably don't want to trade, right? What we're looking for are the signals that seem to have some jump to them. One of the things that I do when I get a signal is, okay, so this is daily gold. What I want to see is, hey, how does the rest of that chart look at the time I get the signal? Right, so here's the signal candle, and the candle before, it looked like my stochastic RSI bottomed out and started to arc higher. Hey, so did my Fisher transform, and what do we know about that, right? When it separates and diverges, it's very, very true to trend. And the reason being is because it uses a Gaussian channel to do that, which filters noise. Fibs, fractals, filters. I like the Fisher transform because it filters noise and it helps me confirm trend. So my T-line 5 AMA are telling me I'm going in the right direction. So I'm looking at this and just watching it explode to the upside. So when I get the signal, I really like to see the stochastic RSI and the Fisher transform really oversold. Right? The Fisher was this. I wouldn't say that the stochastic RSI was, but it certainly bounced and moved higher. And when they're oversold like that, they might have some momentum when they pop and break out. And that's what gold's done. Right? Now, why do we not trade every little tiny cross of the stochastic RSI? First off, that's not the way it was intended. And that's not what it's like. It's telling us that these buyers are still in the room. They haven't left. So there might be all these little tiny intermittent crosses, but the damn thing is trading, it's at like 102. So they're hanging around. They're not going anywhere. They're continuing to buy. And even you'll notice the slightest divergence to the downside. What does the T line tell us? The T line's telling us that these are just red candles in a continued uptrend because this divergence is holding. So I don't worry about the little intermittent flashes of up or down momentum that I might see in other indicators. They're there and sometimes they can help confirm. But if you were to ask me which is the most reliable, it's this. Right? It's the T line and the 5 EMA. And gold continues to rise with very, very little. Well, I don't think it's really had a retracement since August. So the next question is, well, where does price go? And the answer is, I have no idea. Just at this point, it's just continuing to go higher. Yeah, we can draw some trend lines and some channels, and that might be mildly helpful. But at the end of the day, this is pure price exploration, right? We can only use different time frames to get an idea of how extended we are currently. Trading, like, look, this price is well above the 5 EMA. And it does not like to be there for very long. Chances are time and price will come together. And eventually, it will have to find it. Just like it has throughout time in history. But what you're seeing right now is a reaction to, I don't know if it's fear or the underlying risk that people feel is in the market, but it shows up in gold. There's no question about that. This is an undeniable chart. Just to put more context in it, if we switch to the monthly, like you can see, it trades just like everything else on a chart, right? Like you got support from the 50, you bounce, come back to the 20, break the 20, find the 50, bounce, bounce. So that phenomenon of how price moves will eventually happen up here. Doesn't matter the time frame because everything is fractal. So what will happen is that price will come back and find the 20 and the 50, or they find each other. But when this actually retraces, that'll be really something. But at this point, it just looks like a runaway freight train. And because we don't have past price to reflect on, we're just guessing. Right? That dinosaur indicates in the bottom left corner that that's all the data that they have. So, going back to the 40s, 38. So there's data for gold here from 1938 up until current time, present day. So that's a lot of data. And what we saw, how price would come back and tag those levels, will also happen up here. And that is not today's problem, but it will be eventually a problem for someone on a certain day. There's no question about it. So you have risk assets rising, equities falling, oil falling, dollar falling, 10-year falling. So what's your takeaway? Bullish? I don't know. You have to be honest with yourself. There's something going on, right? Like oil continues to weaken. This is serious stuff. Like if you take your trading seriously, then you take everything that goes on in the world around you seriously too, whether it be directly related to the asset that you're trading or not. You might not be paying attention to what's going on with oil and the 10-year and the dollar. You might just be focused on Bitcoin. But you should be focused on them. Because that sucking sound of money will eventually affect what you're trading. So it's in your interest to know what's going on around you. I'm not saying that you have to become an economist, but have some understanding of some basic principles. It may come in handy. It may help you determine what you're seeing as price, on the chart. Pirate chain. This is the chop. This is where if you're going to accumulate, this is where you want to do it, right? All through here. And how do you know you're in that accumulation phase and in that consolidation? Because your moving averages have more than enough time to come and twist together. 20 days, 50 days, 200 days. They all have time to come together. And then boom, price explodes. Again, you have no idea when it's going to happen. You really don't. It may or may not be around news. Like, there's just no real way to tell. Is all we can do is what the chart tells us. Now, if you were accumulating this for a long period of time and all of a sudden price exploded, you're probably inclined, up here and then the retrace, you're going to be inclined to see if it'll do it again. I wish it did, right? Moves up, takes out previous wave's high, and just continues on. But ultimately, just like we saw in that gold chart, price will come back to these relevant levels. No one's saying they're going to stay there, but they will come back to, at the very least, to test them. But all of how we interpret a chart is all the same. Price will come back and find these levels again, just like it has with Bitcoin. And if you're not technically savvy when you're looking at your chart, and maybe you're just looking at a candlestick chart on Yahoo, I don't know, and it just looks like price is going up, do you have any idea or context of what you're looking at? Probably not. And there will be people telling you, that individual, to buy the dip. But do you know where the dip is? Or someone might say, I'll buy when there's blood in the streets. Well, do you have the ability to see the blood in the street? Do you even know if you're bleeding? And that's what a lot of people are experiencing right now. Like, I don't like to see markets go up and down just as much as the next person in irrational ways. But you have to understand that you're going to come back and check levels no matter what. You may just be looking at this Bitcoin chart as this monumental slingshot higher. But after looking at this and doing this for a while, you're going to realize, no, there's a rhyme and reason on how price moves. So we're getting a sell signal on a weekly chart for Bitcoin, where we've broken the 20-day MA. And there's a little bit of some structural relevance here as well. But in order to get to the 50, because we've broken one level to find the next, we have to break that structure. Just one candle at a time. And you're right until the chart invalidates the thesis or what you've planned out. And that's okay. That's totally fine. That's how it's supposed to work. Because again, nothing goes straight up or down. We have these markets so that price can fluctuate, so that you have the opportunity to make money in those price fluctuations, right? And then a lot of these meme coins came along, and then people started saying, hey, well, the best way to make money is just to buy something and then in 15 seconds sell it and hope you don't get rugged. And maybe you can turn your $100 into 500, or your 500 into a few thousand. In the meantime, you've lost twice as much. And you don't even know where it went. And that's fine for some of you for a while, but that's not how grown-ups do it. And I don't mean that to sound harsh, but that's reality. Right? If you want to learn how to read price on a chart, learn how to read price on a chart. If you want to make money doing this, then do it ethically and legitimately. And take the time to learn what you need to learn. You don't need a pickup truck full of tools. You just need a nice toolbox to do this. And you have to block out the noise. And what is the noise? The noise is everything that people tell us that may or may not be true. Right? To be able to believe in what you see on a chart. When you look at this chart of oil and you're telling people it's going to be $70 or $60 before it's 100 and it's currently at 90, they think you're insane. Right? But you have to block out all of that. What other people think, what they say, who they say it to, how they say it. The only thing you need to be listening to is what's on the chart. And you don't have to justify to anybody why you want to learn this. Your friends might think you're nuts. That's fine. You do you. They can do them. Have a plan. Focus, once you've trained yourself up, have a plan. Execute the plan. Treat it like it's your job. And it may, in fact, ultimately be your job. But just treat it as such. Like, it's one thing to want to trade, but don't be a clown when you're doing it. Like, strap on your big boy and girl pants and trade like a grown-up. Trade real things with real volume that aren't full of, like, smiley faces and all kind of other shit. Trade real things like a professional. Did you train yourself when you learned how to drive a car? Of course. So train yourself to learn how to do this. And try not to kill yourself or anybody else in the process. Because what we're doing here is not difficult. Right? When I first started out, yeah, everything was hard. Guaranteed. Everything was hard and outside my scope of knowledge. Everything was new. The vernacular was new. What I was looking at was new. I was still trying to figure out what red and green meant, for crying out loud. But you know what? With a little bit of time, and a little bit of patience, and a lot of repetition, it makes sense. And what you learn doing this, no one's going to take away. They're just not. Right? And sometimes you're going to be right, and sometimes you're going to be wrong. But the idea is not to front run the chart. And that's why a lot of people have problems with, oh, I made a mistake, or I didn't make a mistake. If we just look at the chart, and there's been so much volatility that there's a lot of nonsensical candles out here, but if we just listen to the chart, this is a Bitcoin 4-hour chart, and all that's on it is our script, or part of our script, where we get signals. All you have to do, is this obvious consolidation? Yeah. A 5-year-old could tell you that. Do you get a buy signal coming out of it? Yeah. Again, this is what we're looking at. Right? Price did nothing but fall. You finally get a buy signal, but again, you have no idea what's coming after the next candle. But isn't it nice to be at the right place at the right time? Couple red candles, but what are they? They're just red candles in a further uptrend. How did you know it was an uptrend? Because the friggin' chart was telling you. This isn't hard. There's no reason to be scared. Is it intimidating? Sure it is. I felt like the village idiot when I first started learning this stuff. I was the second youngest person in the class, and the smartest person that I felt was an 82-year-old lady. I wanted to sit beside her. My girlfriend could wait. This is something that I've just developed over time. This wasn't even part of my initial training. But part of the reason it exists is because I felt that things were being made more complicated than they needed to be. And there's an easy way to break this down into digestible pieces. And the first big piece that you have to swallow is that You have to do what you're told. This is the perfect example of a chart that's been consolidating and then breaks out or breaks down. That's the other those are the only two options. This is money if you're trading with a little bit of juice. But does anyone actually monetize the whole leg? No. Very few people that are quote unquote trading. Why is that? Well, because they might be using a lot of leverage, which can be problematic, or they get scared when they see red candles like this because they're thinking, oh, this move is over. But what we know is that we haven't broken the T line, so we know it's not. So they might close their trades in areas like that. Or just get so excited that they had this big green candle and then they saw that, they're like, okay, I'm done. Now, I'll get accused of taking too much risk because I stay in the trades too long. Well, too long for who? Not for the trade. Because the chart's telling us that this thing's still intact. Until it's not. And it'll tell us when it's not. It's either going to show up as a subtle signal or one that's a little more dramatic, but it'll tell you. How hard is that? Not very hard. You don't have to take every single signal that you see. Right? But they work. And what you're seeing on a 4-hour chart is basically an early entry onto the daily, right? More flat trading, signal pops. And are we still in a downtrend from this move? Yes, you're still operating under a sell signal. And price still is unable to change the trend. So we just do what we're told. As long as that's going on, I stay short. That's not really all that difficult. And there's some nuances to doing it, sure, because it's not just an indicator, it's really a system at the end of the day, right? But it's not hard to learn. And you can use it on anything that you want to. Doesn't matter if it's super popular, lots of liquidity, it'll all work, right? You just want to stay away from the thinly traded stuff, that's all. But if you guys have a ticker that you want me to look at, let's look at them. That's why we do this. And the other thing I just want to talk about today is that one of the things that I've found over the last few days is that I need to be taking profit more frequently. Like, that's just my own experience over the last few days, that because of the volatility, I need to be taking profit quicker. Because just when I think, oh, you know what, it's might run a little bit on me, boom, it reverses either up or down, and then I have to give a little back. So I'm finding that I have to take my profit more frequently, which is fine. I don't mind doing that, but it's just one of the things that I've noticed over the last few days that's a little bit different, is that that added volatility is making it necessary to take what's yours a little quicker. And I guess what I'm getting at is there's been a few instances where I'm happy with where I'm at, but I'm like, oh, I think this is going to run. And instead of running, it just does the opposite. So instead of waiting to see if it runs, I'm just taking what's mine and not wait around. Let's look at CFX. So this was something that we all loved, right? Everybody loves CFX. But it too has just broken right down. When did you get a sell signal on it? Long before this big sell-off. 20th of September. So you could have taken this signal and not have seen, even to this day, any reason to exit the short, because the market was telling you that that trend down was still confirmed. So, and if we wonder, can we pick up things before they happen? Well, here's Advanced Micro Devices, AMD, which I'm sure you're all familiar with. And when did it have the big pop? It had the big pop right in here. Whoops, sorry. The Monday, I guess, would have been the 6th of October. Somewhere, someone had some idea. We'll call them, quote unquote, the smart money. The smart money is what everybody but you knows. Everything that's all available information and sometimes unavailable information to the general public will somehow show itself. Now, I sometimes talk about the fingerprints of money, right? That's kind of what we're following, right? Because what we're doing is a real-time representation of what money's doing when we're tracking that. We can see the little nuances of money in our charts. Somebody had been buying through here, obviously. And one of the things about consolidation in that accumulation phase is it's a great place to hide your trades. So if you're an institution, it's a great place to be hiding trades when there's flat like this. This is an example of when you can't hide anymore. But the point is that the market, the smart money, knew something was going on here, and they started buying into this stock with enough momentum, in enough consistency to produce a buy signal 10 days before, 10 calendar days before it actually popped. And that sell signal was likely an indication that that smart money couldn't hide anymore, right? Because you see the T-line and the 5 EMA expanding. They couldn't hide it anymore, so that the money was coming in. This is inflow. That's why your 5 EMA went white, right? Is because the money was coming in, and then bam. So the answer to the question is yes. We can pick up in advance, from time to time, not every time, of when something will look really predictive. But basically what the script is doing for us is it's showing us the money's coming in enough to produce the buy signal, and then we can see for ourselves on the chart as the T-line and 5 EMA separate out, we know what that is. Whether it happens slowly or quickly, we know what it is. We know it's money coming in with enough momentum for us to see the fingerprints of that on our charts. So yeah, we could have seen. I wasn't trading this, but it was a question I was asked in a speaking thing I did a couple weeks ago. So yeah, you can see it. Now at the time when I was asked the question, I was nervous because I hadn't looked at the chart and I had no idea if it printed a signal in advance of the move, but it did. Okay. What else can we look at? Pirate Chain we looked at. We looked at XRP. Let's look at Link. Is Link any different from the Bitcoin or XRP chart or Solana chart we looked at? No. If you see in your charts exactly the same setup, whether this be, we've seen it on XRP, we've seen it on Bitcoin, we've seen it on ETH, we've seen it on Solana, this setup here, right? When you see that on all the major charts, do you think it means anything? Probably. These are things that we saw over the weekend. We saw this resistance here. We knew it was going to roll over. The people in here knew it was going to roll over because they could literally see it on the chart, knowing how this unfolds. These two candles did not have enough momentum and enough velocity to pull that 5 EMA up through the T-line. which is one of the factors that flashes a signal. Couldn't do that. It didn't even meet any of the parameters to give us a signal. And we know what it means. That's a failed breakout. Next candle's red, equal tops. Divergence is still open. We know the trend is still down. And this is pretty much on every crypto chart we're looking at. It doesn't matter what it is. And if you look at stocks, let's look at stocks. Let's look at it. Nvidia's having a green day. One of the few. But what does it tell us, this daily chart? I'm glad we looked at this. So we're still operating under a sell signal. So this green candle, what does this green candle mean right now? Really nothing. Just a doji candle that can't break the 5 EMA on a daily. So that's weak to me. So when you watch business news and they say, oh, such and such a stock was up $2.64 and the Dow was down 220. What does that mean when you hear that? It means absolutely nothing to me. Zero. I have to see it on the chart, right? Did the Dow, when it dropped 200 points, did it break the 50? Because if it did, that's a whole other thing. Did it bounce at the 50? Well, that's a whole other piece of news too. So I have to see it on the chart. So yeah, hey, the market was down, but Nvidia was up 1.5%. What did that 1.5% look like on the chart? It was a relatively meaningless candle that couldn't break a level of resistance. That's what it represented on the chart. Now the newscaster doesn't realize that. They think they've told you something meaningful. But to me, it doesn't mean anything. It just means that this candle doesn't have enough energy to break trend while it's trading in an area of thin volume as it threatens to fall into a volume gap. That's my takeaway. It may not be anybody else's, but that's how I look at it. We don't have, again, a pickup truck full of tools, but we just have a decent toolbox full of some real useful ones. And just using our signals to help guide us, right? Okay, there's a buy signal at $102 that came Friday, April 25th. It's up to you whether you take it or not. But if you did, you didn't see any suggestion of selling until 185. Now, you could have bought common stock, you could have bought long-dated calls. There's so many different ways to trade it. But regardless of what you chose, you made a lot of money just by doing what you're told. And, you know, yesterday I did a stream with Rico Moneybags, and he pointed something out that I didn't even notice. We were on the Bitcoin chart, and we were looking at the monthly, and he says, wow, your buy signal on the monthly came at like $26,000 back here in April of 23. There's your buy signal right here. And even today, from April 23 to today, we haven't seen a sell signal. Like, not even close to a flash. This has still been one bullish chart. Now, I understand it's a monthly. A lot's going to go on in these candles. But on the monthly chart, price has held the T-line. We have not, well, I guess it's one chance here we closed below it. That was it. But we haven't broken trend at all, and everything gets support from the T-line. Now, you could be trading on the, you know, looking at the daily, shorter time frames and feel like it's an absolute circus, which it does feel like that. But when you look at this monthly chart, you're like, wow, still bullish. This slight sideways mild retracement down was nothing but supported from the T line, and same with this. And even in this month so far, as crazy as it's been, we're still hanging around at the 5 EMA, which is a bullish level of support for us, right? And again, we haven't even tested the T line this month. Once you start to close below the T line on the monthly, that would get my attention. But thus far, even with all the drama over the last few years, just to put it into perspective, Bitcoin hasn't closed below the T line. And if this was a 15-minute chart, you'd be thinking this is awesome. Or a daily chart. This is a monthly. So lots of drama, yeah, but still bullish. And how long will it last? Until the chart tells us that the money is showing us that it's softening. It's all about money in and money out, right? And you just follow the chart. One that gets a lot of talk is Zcash. Another great example of, and you'll see these charts in crypto more often than anywhere else. This thing was pretty flat for a long time. And yeah, there's money to be made as a trader in these moves, but it certainly doesn't have the movements that Bitcoin or ETH or Solana have. But that's probably not why you're buying this either, to trade it like that. This is obviously accumulation. Obviously. And eventually, you can't hide the buying momentum any longer, and you print a signal, and this one is the one that opens up. It doesn't show you from here, the 2nd of September, it never showed you a sell signal, even now. Now, it's your choice on whether you take the buy signals or the sell signals. Just understand what you're looking for that will make them runners. They won't all turn into runners, guaranteed. A lot of them this is choppy stuff, and I don't like to trade it. But I do like to trade the breakouts. And how do we see these breakouts before they happen on our daily charts? We look to those shorter time frames. And if we're lucky, yeah, we pick this one up several days before it actually showed up on the daily. And this is why I like the 1 and 4 hour charts. When I'm looking literally to make a trade on the daily, I want to see what's going on those 4 and 1 hours, so that I can see if I think, for example, it's going to break out, it'll show me in advance, right? When I go to the 4 hour or the 1 hour, it's going to show me a buy signal. And I'm checking the conditions to make sure that, hey, it looks like it has some legs, and I might get what I want on the daily. And then you can just confirm from one time frame to the next. Hey, I got a buy signal on the 15. I got a buy signal on the hourly. I got a buy signal on the 4 hour. By that point, you're well on your way. And, you're hoping for the confluence to bring you up to that daily signal that runs. That's all I'm doing. It's like as simple or as complicated as that. And there are going to be times where, hey, the moves aren't as long or as profitable as things like this. But they do appear. 10, 20, 30% of the legs are going to be like that. Most of them are just going to be the regular ones you got to grind out. Right? But when you click a runner, what are you looking for? You see how you've got this swooping motion, right? Price starting to accelerate up. 5 EMA going from red to white. Like all of those, then you flash the signal, boom, price takes off. There's an ebb and flow to this, right? So after your move higher, you get choppy. That's not unusual, right? It's not everything is V-shaped. And I think a lot of you are kind of accustomed to that. Oh, price crashed, price went up. Price went up, price crashed, up and down, up and down. Not everything is is V-shaped. It's more grind away than anything else. Anything else you guys want to look at today? Anyone? New projects? Things we've looked at before?
I got a question, Glenn.
You bet.
Looking at the macro, I know you brought up gold. How often, or I guess in your experience, have you ever noticed that gold and the Russell will break out and be in price discovery at the same time?
I don't think I've ever
So
really compared them. Um,
I would always have the impression that it would do the opposite.
but
Um, but the RTY is looking to backtest the T line on the daily, it looks like, or close to it, but still overall bullish.
I think I think a lot of these charts, Delatoshi, have been trending. So what you're seeing is gold's daily and the Russell's daily. Let's go to the weekly actually, just to take some of the noise out. So similar looks, but I actually think that a lot of these things would be pretty consistent. Obviously, the Russell has a little more volatility to it for obvious reasons, but I've never really taken the time to correlate them or try to. But you can use, like, that's the great thing about the TradingView platform. So if you guys can see this, up on the right hand side here, you click on this little thing, it's going to show you a single chart or multiple different layouts. So if you want to actually look at several charts at once, you can by doing this. Whatever layout you like, you'll find one, and that's helpful. Or you can overlay onto the existing chart too. But I like to be able to have a couple different panels. But this thing has just been, it's textbook, right? The divergence opens up and it just follow the yellow brick road. What we're doing here is the objective is not to front run. Like, oh, I'm going to do this because I believe the market's going to do that. Well, you may or may not. You know what I mean? Like,
Yeah.
That's, yeah.
No, and it's helpful, like you said, splitting up the charts to answer that specific question
Yeah.
and just to get an idea.
Well, sometimes
There
you'll
you go.
find you think that they've been trading in a similar direction, and then you actually plot them and you go, oh man, was I ever wrong? Right? So having that visual representation, I find, is really helpful. It's just kind of like, for me, hearing that the market was up or down a certain amount, it doesn't mean anything until I see it on the chart. So,
Good point. Yeah, all that's just noise.
Yeah.
At the end of the day, you gotta look at the candles.
Yeah.
And your strategy.
And what we think and feel and believe doesn't matter, right? It's irrelevant. Like, probably oil's a great example of that. There's a lot of people that, for whatever reason, believe that it's always going to go up. And they might have fundamental reasons for that. Oh, this supply's down, the demand is up, so that means that the price is going to go higher, and storage this and OPEC that. It's a nice conversation. It fills up X spaces on Twitter, right? It does. But at the end of the day, why don't we just look at what price is telling us? Why don't we gain an understanding of how price reacts at support and resistance levels, and what price does to determine where it may go next, and how can we decipher what it's telling us? Right? This is, again, is the monthly oil chart. It was a kind of a process of daily, weekly, and monthly analysis to come up with that level. And now that that level's been attained, and many, many times, what's the next stop? Well, the chart tells me it's somewhere down here. But I've just taken the time to learn what we've talked about today, every Tuesday and Thursday. I took the time to learn this. And yeah, there were times I thought I was batshit crazy, even myself. But you know what? We're not. There's a lot of people that have real effective ways to read price on a chart. This is mine. And I just want people to be able to mitigate risk and have some structure and understanding of what they're looking at, so that they can become safer, more profitable traders. Right? It's not necessarily about how much you can make. It's also about how much you don't lose. And when you've lost a few times, you'll realize how important that actually is. Right? We have to live to trade another day. And that means by setting stops, taking profit when you can, and not using too much leverage. I think that's the probably underlying problem that many of you have. You're using too much juice. You'll come out of this session today, a lot of you, and you'll feel pretty good, or you go back on YouTube and you kind of polish up and you start to apply the approach. And I know this happens because some of you have told me, but you're still using 50x leverage on an altcoin. Right? So guess what? That's going to be a problem. So it's not just your ability to read what you see, and it's not just your ability to understand how price reacts at support and resistance levels for the first time or second time. It's not just about current price revisiting past. It's about the mechanics of the trade as well. And I think the easiest thing is setting appropriate stops and not using too much juice. And I maybe preached a little too much there, but I think if everyone was to do just a little bit of that, they'd probably be better off.
No, that's definitely true. Definitely true. For someone that's a beginner, they may not know that it's two different mindsets.
Yeah.
You want to learn to read the price in the chart, but at the same time, yeah, you can wipe yourself out in an instant.
Yeah, and that's not the goal.
Yeah.
And look, we all, as we learn, we all go through the process of thinking we know and thinking we can handle and manage, thinking that we've covered all the bases, and every day we get reminded that we're not quite there, and that's okay, as long as we learn from the mistakes that we make and we don't try to make them anymore. This Bitcoin chart on the daily, where we took the time to draw these levels so that we could illustrate in the future how relevant that methodology is, that this is a great takeaway. This structural level on Bitcoin, obviously there's our identifier of it, and here we are. Just like it respected these levels to the upside for support and resistance. They're not always going to be perfect. That's okay. As long as you can frame it up in some context so that when things like the last few days start to happen, you have an understanding of what you're looking at. It's that big impulse candle down. Your retrace doesn't bring you and break any particular levels, and all that divergence is there. Oh, there's another red candle, another red candle, another red candle. You're looking to see where the support and resistance is, because you anticipate in the event of a continued breakdown that you will find it. Right? That's the intangible stuff. Right? How do we go from 90 some odd dollars on oil to 61 and have it work out? It's just because you understand how price reacts at certain levels when it meets support and resistance, and in the event of a continued breakdown, that's where it was going to end up. Right? And it did. It's just using this same kind of methodology. So now we're in the situation where you've got a structural break that could happen. And if that does happen, what's the next level down? Well, there's a little bit of structural support in here at 105 and 140. Break that, and there's that number that we talked about earlier. And it's These are legitimate, right? Is when you can line up all that past price like we have months now, you'll see how relevant it is. You may not think so at the time, but it'll show you something that will surprise you for sure. Just like for example, I like to draw trend lines, right? As soon as I could attach this lower high, I dropped it on, not realizing that it was going to be almost to the penny the third time, or second time rather, and has been really accurate even further down the road. Again, I'm not living and dying by this trend line, but is it showing us that there's something going on here that that makes this read really clean? Yes. And it's just another tool that you have. It's just one of the few useful tools that you can learn how to use to put all of this together in a very workable system. It's very easy to do. So, anyways, guys, if there's nothing else, I hate to cut this off, but I've got to run. And I'm hoping that Friday and the weekend don't turn out to be insane, but you never know. But that's why we do these things, so that we can come back in real time and go, hey, look what's going on, and look what's happening, so that we can demonstrate that we can put some structure and rationale around even the most irrational times. So what is really happening on this Bitcoin daily chart with nothing on it but our script? We are pulling back from an all-time high, and you've essentially come back to a structural level. If you bounce at the structural level, then hey, maybe you're going to take a run at the previous high. Break down, you start looking for previous lows to the left. Everything else we can add on. The most basic thing that we need to understand is the trend is our friend, right? The candles are there to fool us, but our system of filtering and triggering is allowing us not to be fooled by these green candles or these red candles in an uptrend, because we can filter out their BS. And even from there, we can find ways to re-enter those trades in the right direction of the trend. So let's, I'm going to wrap this up for today. I thank you all for stopping by. This will be available on my YouTube page at Blunhouse TA. I believe it's also on FEG's YouTube page. And of course, it will be live on X, so you can find it on my X page as well. So I look forward to talking to you again. For now, have a great weekend, everybody, and we will see you